into this, as we've said, the Fed is raising rates. They did a 75 basis point rate hike at the last meeting, and it looks like futures are pricing in another 75 this coming meeting this month. How long before this starts to have any kind of meaningful impact on inflation?
That the Federal Reserve, and Powell was pretty clear on this, I thought, at the last press conference. So what's the relationship between the headline rate and the core rate? And the Federal Reserve, Powell says, and I think that my own work could lend credence to that argument or support to that argument, that the reason that the Federal Reserve would look at the core rate is not that they exclude volatile ingredients like food and energy. And it's not that they exclude food and energy because they have no control over them. They exclude them for a very practical reason, and that is that over time, the headline rate goes to the core rate, not the core rate going to the headline rate. So the Federal Reserve targets the headline rate, but as Powell said, the key signal is coming from the core rate. And that's what I'd like to suggest to you is that the headline rate looks like it's going to accelerate still.
Right.
You get that CPI number. Look, out of the last 3 months, give me the June read of where the consensus has it about 1.1%. And that means 3 out of the past 4 months, we've had 1% or higher CPI month over month. But I want to say is that it's increasingly, even though a lot of people talk about how it's broadening out, increasingly food and energy are the driver. And I say that because if things go as economists expect, the rough direction is that hourly earnings, when we get that employment number on Friday, would have fallen for the 3rd consecutive month. The core CPI is likely to have fallen for the 3rd month as well. And so this is beginning to shape up as if, yes, we have a problem with headline inflation, but the core inflation, which is a better predictor of where inflation is going, is already rolling over. Hourly wages are slowing as well. Now, they're still elevated, but the key is the direction. The direction is turning. And how we invest in that, I think it's sort of like the question we used to always say is that how does one respond to the first hike in a cycle versus the last hike in a cycle? And it's the same thing, I think, for us as investors. We have to think about not just where we are, but sort of the direction things are headed. And I think that this suggests that the labor market's weakening and prices have begun that process of stabilizing and turning lower in that core measure.